It's no laughing matter, but Jay Leno found a little humor in it, and I'll let him put it into perspective for you.
Bad day for the stock market, down nearly 400 points. Whew. They're calling it the worst September meltdown since the Red Sox, I guess.
Ouch. Sorry for the Red Sox fans out there, but the point is all eyes are on the market to see what happens when it opens again in the morning. And I want to bring in financial reporter Nicole Lapin to get you prepared on what you can expect. Get ready. Fasten your seatbelts. So what happens? What's likely to happen when Wall Street gets back to work, Nicole?
That I wish I knew. I wish, Jay Leno or I, it's either of our guests, right? We would be in the wrong industry if we could actually tell you. But stock market futures, which are a pretty good indicator of how the market will open, are slightly higher. Last time I checked, they are in the green. So we could be getting a little bit of a bounce from the beatdown we saw last week. And that, of course, saw the Dow and the broader S&P 500 off 6.5%. And let me tell you a little secret about buying stocks in the stock market. It's very similar to buying groceries at the grocery store, at the supermarket. When things are on sale, which is another way of looking at what the market is doing right now, there are a lot of bargain hunters. So we could see a little bit of a bump when Wall Street opens tomorrow morning. Yeah,
listen, there's lots of concern out there about Europe and the markets there. This current crisis in Europe, I hear that it could make the 2008 meltdown look tame by comparison. I'm wondering if you're hearing anything like that from the IMF and World Bank meeting in Washington.
That's actually the scariest thing that I'm hearing right now, Don, out of leaders meeting in Washington right now, is that it could make 2008 look like small potatoes. Because 2008, remember, was a banking crisis that stemmed from the housing sector. And this could be much worse. This could be a solvency crisis versus a liquidity crisis, because leaders don't know how fast and how far this is actually spreading in terms of contagioncy. And that's really, stemming from the bad guys like Greece and Italy and Ireland and Portugal. So we don't know how fast and how far it's spreading right now, which is one of the biggest concerns we're hearing from Geithner, Treasury Secretary Timothy Geithner, coming out of Washington today, saying that could also infect their banking sector, which could come over here and make 2008 look like a walk in the park.
As far as the markets tomorrow, too, we're going to get some indication when the European markets start to open, the Asian markets start to open not long from now. So that may give us an indication what's going to happen here in the U.S. But you know what? The oil markets, Nicole, are also being affected, but it's not a bad thing, such a bad thing for consumers, because at least in the short term, gas is under $3 in some states.
It could be a silver lining for those consumers. You're right, Don. But look, oil cuts both ways. It could be a short-term stimulus for consumers because they're spending less to fill up their gas tanks. So presumably they're going to spend more on stuff like dinner and stuff like clothes. But on the flip side of that, it also shows weakening global demand. And that cuts in longer term to consumer sentiment, consumer confidence, and fear of things like the markets that we just talked about of Europe. So folks are not actually spending like we would hope them to be spending, I would say, and this may not make me the most popular lady on the show tonight, but perhaps deal with a little bit of pain at the pump right now, because that could be nothing compared to what we are looking ahead to if we do see this continued global weakening in terms of not only the energy sector, but a global economic recovery.
Nicole Lapin.
So
thank you.
Just keeping it real.
Yes, you are. Thank you. We appreciate it.
Great to see you.